You may not be trying to hide anything from SARS, but if your returns, payroll, VAT, and bank records are telling different stories, your business can still look suspicious. That is the part many honest business owners miss. Quick transparency note before we continue. I am SIA's digital twin, created to explain business and tax topics in a simple way. The real SIA wrote the technical parts of this script, while he is busy helping clients inside the practice. Here is the uncomfortable truth. SARS does not see your intentions first. SARS sees your returns, your payments, your declarations, your balances, and your compliance behavior. So even if you are trying to comply, messy records can create a risky pattern. And once that pattern starts showing up, SARS can start asking questions. So in this video, I want to walk you through 5 signs that your business may need a SARS risk check. Not because you are guilty, but because your records may be creating a story that you would not want SARS to read without context. Sign number 1. Your business declares tax, but the payments do not follow. The VAT return is submitted, but the money is not paid. The EMP201 is submitted, but PAYE, UIF, or SDL is left unpaid. The company income tax return is filed, but the assessed balance remains on the SARS statement. At first, the owner thinks, at least the return was submitted. But SARS does not only look at submission, SARS also looks at payment. If the business keeps declaring amounts but not paying them, the debt grows. Then penalties and interest can start building on top of that. This is where cash flow pressure becomes a compliance problem. Sales may be coming in, the business may look busy, but SARS may see a business that is falling behind. Sign number 2. Your VAT returns are filed, but your records cannot support the input VAT claims. You submitted the VAT 201. You claimed input VAT. Maybe SARS even accepted the return at first. But if SARS later asks for invoices, proof of payment, supplier documents, and proper accounting records, can you produce them? A VAT return is not just a number typed into e-filing. It must be backed by records. So if your business is claiming VAT based on rough estimates, screenshots, WhatsApp messages, or incomplete paperwork, you may be creating risk without realizing it. Here is the mini test. If SARS asked you today to prove the VAT you claimed, would your file be ready? Sign number 3. Payroll and UIF records are not aligned. The salaries paid from the bank account should agree with the payroll records. The EMP201 submissions should agree with PAYE, UIF, and SDL where applicable. UIF records should not be completely different from what the business is declaring. For example, if salaries are paid every month, but there are no proper payroll submissions, that is a problem. If directors are taking money every month, but nobody knows whether it is salary, loan account, dividends, or drawings, that is also a problem. Before I continue, this is exactly why we offer a free SARS risk check. It is not about scaring you. It is about helping you see what SARS may already be seeing in your numbers. If you want us to check your business, use the link in the description to request your free SARS risk check. Sign number 4. The company bank account is being used for personal spending. The owner pays groceries from the company account, school fees from the company account, personal petrol, family expenses, random transfers labeled owner or cash or nothing at all. Then at year end, the accountant has to explain whether those payments were salary, dividends, loan account movements, reimbursements, business expenses, or personal expenses paid by the company. The problem is not only that money left the business, the problem is that nobody decided the tax treatment before the money moved. That creates messy loan accounts, weak financial statements, and possible SARS questions. If the company account looks like a personal wallet, the business may not look professionally managed. Sign number 5. The owner only asks for help after SARS sends a notice. This is probably the most common pattern. The owner ignores the small warning signs. Old SARS balances, penalty notices, outstanding returns, verification requests, tax clearance problems. Then suddenly SARS sends a demand, compliance warning, or audit-related letter, and now everything becomes urgent. But the real issue usually started months earlier. A SARS problem does not always start on the day SARS contacts you. It often starts when the records stop matching reality. So what should a proper SARS risk check review? It should review your registered tax types, outstanding returns, balances, penalties, payroll exposure, VAT exposure, accounting records, and director loan accounts. It should ask whether your VAT, PAYE, income tax, payroll, and bank activity are telling one consistent story. Because compliance risk is usually a pattern, not one isolated mistake. One late return can happen. One missed document can be fixed. One payment delay can be explained. But when late payments, weak VAT records, payroll mismatches, personal spending, and ignored SARS messages all appear together, that is when the business starts looking risky. And here is the solution. Finding the problem early gives you more options. You may be able to submit outstanding returns, correct records, prepare supporting documents, clean up loan accounts, request payment arrangements, or respond properly before the matter escalates. But if you wait until SARS forces the conversation, your options may become more limited, more expensive, and more stressful. So the takeaway is simple. Your business does not need to be dishonest to look risky. It only needs messy records, unpaid balances, unsupported VAT claims, payroll confusion, and delayed responses. That is why our free SARS risk check is a solution for your business. It is designed to give you a clear picture before SARS forces the conversation. If you recognized any of these warning signs in your business, go to the link in the description and request your free SARS risk check with the PTY guy. Let us help you understand what is happening in your numbers, what SARS may be seeing, and what your next step should be. Because the best time to fix a SARS problem is before it becomes a SARS emergency.